All right, let's jump straight into this explainer. We're looking at how a absolutely crucial environmental safety net in India is getting a massive modern overhaul. We are talking about the Environment Relief Fund, which is a specialized pool of money originally established under the Public Liability Insurance Act of 1991. Now, the entire purpose of this fund has always been to provide immediate, no questions asked relief to victims of accidents involving hazardous substances. But recently, a giant reset button was hit. The Environment Relief Fund Amendment Scheme of 2024 has completely rewired the system, transforming it from a slow, kind of reactive pool of money into a proactive, transparent, and totally digital engine for environmental justice.
To put things in perspective, you've really got to understand the sheer scale of the money involved here. At the end of the 2023 financial year, a staggering 1,060.95 crore rupees was just sitting in this fund. Think about that. That's a massive war chest explicitly designed to help victims of industrial disasters. And yet, despite having all that capital, official disclosures revealed that literally zero payouts had been made to victims since 2019. You have over 1,000 crore rupees sitting completely dormant, while the people and the environments it was meant to protect were just left waiting.
Section 1, a fund left dormant. So how exactly does a fund meant to rescue people just stop working?
Well, to understand the fix, we kind of have to look at the history. The roots of the Environment Relief Fund are tied to one of the darkest moments in industrial history, the 1984 Bhopal Gas Tragedy. In the wake of that absolute disaster, the government realized they desperately needed a guaranteed financial safety net. That led directly to the Public Liability Insurance Act of 1991 and the creation of this fund. But as we just talked about, by 2019, the gears had completely ground to a halt. The administrative bottlenecks just got too massive. And that timeline brings us right to the 2024 amendment scheme, which is basically a targeted rescue mission to get these vital funds flowing again.
Moving to Section 2, the 2024 regulatory reset. This is where we see a fundamental overhaul of the entire system. Here is the real game changer, the changing of the guard. For years, the fund was managed by the United India Insurance Company Limited, but effective January 1, 2025, the Central Pollution Control Board, the CPCB, takes over as the fund manager for a 5-year tenure. And why is that such a big deal? Well, the CPCB is a statutory body under the Ministry of Environment. So this move brings the fund under direct central government oversight. It takes the money and aligns it directly with the exact agency responsible for monitoring pollution and environmental compliance in the first place. But it's not just a name change on an office door. The CPCB is building a highly modernized, digital, and totally transparent system. For starters, they are now legally mandated to deploy funds within 15 days of receiving an order. No more waiting around. To make this actually happen, they're building a dedicated online portal to track every single rupee. And to guarantee financial integrity, the accounts are going to be audited by independent professionals approved by the Comptroller and Auditor General. To fund this massive digital upgrade, the administrative service fee was slightly bumped from 1% to 2% of the annual corpus. Honestly, it's a small investment for a massive leap in accountability. Section 3, Funding and Industrial Liability. You're probably wondering, where does this massive pool of money actually come from? If you own an industrial facility in India that handles notified hazardous substances, you've got a strict, legally mandated journey. Step 1, you can't even operate without buying a public liability insurance policy, period. Step 2, when you pay that insurance premium, you have to pay a matching amount directly into the Environment Relief Fund. And Step 3, which is a really important new emphasis in the 2024 rules, you have to actively publicize the rights of affected persons to claim relief. The local community literally has a right to know they are financially protected. But wait, it gets bigger. The 2024 scheme severely expands how the fund actually makes money to guarantee long-term stability. It's not just those matching premiums anymore. Now, penalties collected for non-compliance under the PLI Act, they flow right into the fund. Amounts levied under the National Green Tribunal Act can be directed here too. Plus, this massive pool of capital is strategically invested in public financial institutions, and every bit of interest in maturity proceeds gets reinvested right back into the fund. Now, keeping things in perspective, there are limits to the insurance side of things. 250 crore rupees. That is the strict maximum aggregate liability cap for an insurer for any single accident. And if a facility has multiple accidents in a single year, the total insurance payout is capped at 500 crore rupees annually. But here's the crucial takeaway. What happens if a truly devastating disaster blows past the insurance limits and the ERF's available balance? The industrial owner can't just wash their hands and walk away. Absolutely not. They are personally on the hook for the remaining balance, which the government will aggressively recover as arrears of land revenue. The accountability is inescapable. Okay, Section 4, Expanding Relief and Restoration. Let's talk about actually helping victims and nature. The scheduled compensations are incredibly clear-cut. If there's a fatal accident, the relief is 5 lakh rupees plus up to 1.5 lakhs in medical reimbursement. Total permanent disability gets you a 5 lakh cash relief plus up to 25,000 rupees for medical costs. It even covers property damage up to 50 lakh rupees and temporary loss of wages up to 25,000 rupees a month for a maximum of 3 months. But the true genius of the PLI Act is this. Victims receive the scheduled compensation promptly. They do not have to spend years in court proving that the industrial owner was negligent. If the accident happened, the relief is triggered. It's that simple. But honestly, this is where the 2024 amendment gets truly groundbreaking. For decades, this fund was entirely reactive. It only paid out after human beings were hurt or property was destroyed. Now, for the very first time, funds can be actively used to heal the ecological damage caused by hazardous substances. We are finally shifting from merely compensating victims to proactively restoring the natural environment itself. Of course, human victims still come first. They have to. So to maintain a strict balance and make sure the fund isn't totally wiped out by one massive cleanup project, the new rules dictate that a maximum of 10% of the total ERF can be sliced out to restore any single polluted site. That leaves a massive 90% fiercely protected for direct victim compensation.
And that 10% allocation, it's laser-focused on a very specific, stubborn problem, what we call orphan sites. Think of a heavily polluted area where the original industrial owner has vanished, gone bankrupt, or just can't be identified. Previously, these toxic sites just sat there, polluting the community. Now, the central government can order the CPCB to use the ERF to clean up these orphan sites, ensuring that even when a polluter goes missing, the environment doesn't suffer indefinitely.
All right, wrapping things up with Section 5, the future of ESG compliance. What does this mean for corporate accountability in India? Let me tell you, the stakes for dragging your feet are no joke now. If an industrial owner tries to skirt their responsibilities and fails to pay their penalties under the Act within 90 days, they aren't just looking at a slap on the wrist. They can face up to 3 years of imprisonment or have their fines completely doubled. The government is sending a crystal clear, completely unambiguous message to industries handling dangerous materials. This whole framework takes a dormant pool of cash and turns it into a hyperactive engine for ESG, environmental, social, and governance compliance. It shifts the entire national focus from reactive apologies to proactive remediation. It forces digital transparency into a previously opaque system. It actively eliminates the bureaucratic bottlenecks that kept victims waiting for years. And it reinforces strict, inescapable accountability for corporate polluters.
It's honestly a massive leap forward. By tying together mandatory insurance contributions, direct environmental healing, and strict digital oversight into one centralized package, India has created a remarkably robust framework. And it leaves us with a really interesting question to ponder. As this dormant fund finally wakes up to proactively heal both victims and nature, will this digital centralized model become the new global standard for environmental justice? Thanks for joining me on this explainer, and keep questioning how the systems around us are built to protect our future.